Hello, good evening, everyone. So today we're going to go through VAT, right? So we are going to start with what is VAT. So VAT stands for Value Added Tax, and it is governed by the VAT Act, and is charged on a sale of goods and services. We have VAT exempt, zero rated, and standard rated supplies, which I will explain shortly. So standard rated supplies are supplies in which we charge 15% of VAT on the selling price, right? And then we have zero rated supplies. On zero rated supplies, VAT is charged at 0% on the sale of goods. Examples are brown bread, dried mealies, dried beans, lentils, pilchards, or sardinella in tins or cans, rice, fresh fruit and vegetables, vegetable oil, milk, eggs, edible legumes. So these are examples of zero rated. So when you see brown bread, just know that it's zero rated. And then VAT is going to be charged at 0%. And if you see any fruit or vegetable oil, everything that is listed here, it is zero rated. And then we have VAT supplies. VAT exempt. If it is VAT exempt, what it basically means is that no VAT is charged on it. For example, we do not charge VAT on export. When we export goods, when we sell to other countries, we do not charge VAT. We do not charge VAT on residential accommodation. So if you're providing residential accommodation, you cannot charge VAT and those kind of things. Those are the examples of VAT exempt, right? Then we move. So how to calculate VAT, right? So always 100 is the selling price excluding VAT, and then 15 is the VAT rate. When it's 115 is selling price including VAT, right? So calculation when given the VAT exclusive amount, VAT is equals to A is the amount that we're given. VAT is equals to A. You ask yourself, what am I looking for? You're looking for the VAT rate, right? And then you use 15. And then you ask yourself, what do I have? What am I using? You are using the VAT inclusive amount. Then you divide by 115, right? And then when you're calculating for the VAT exclusive, well, given the VAT inclusive amount, you take A, which is the amount that you're given, the VAT inclusive amount, you multiply it by, you ask yourself, what am I looking for? VAT exclusive, which is what? 100. And then what do I have? VAT inclusive, which is cost what? 115. All right, so it goes like that. And then calculation when given the VAT exclusive amount. If you're given the VAT exclusive amount, you're going to take the amount that you're given, the VAT exclusive, which is A on this case, you multiply by, you ask yourself, what am I looking for? VAT. If you're looking for VAT, you multiply it by 15, and then you ask yourself, what do I have? The VAT exclusive amount, and then you divide by 100. You're going to get the VAT amount for that transaction. And then we have, when we want to calculate VAT inclusive, while you have VAT exclusive, right? So you're going to take the amount, which is A, you multiply it by 115, which is what? The number for VAT inclusive, right? And you ask yourself, what am I looking for? VAT inclusive, and VAT inclusive is 115. You divide by what do you have? You have a VAT exclusive, that is 100, right? So we have two types of VAT. We have VAT input and VAT output. And then VAT input is the VAT that the company claims back from SARS when they buy goods and services from their suppliers or anything. So when the company buys goods, let's say they're buying stock, those kind of things, there is VAT input, right? This amount is going to be claimed back from SARS. And then we have VAT output. VAT output is the VAT charged to customers that buy from the company. So when the customers buy, we charge them VAT output. And this VAT output is being collected on behalf of SARS by the company. So this amount is being paid over to SARS, right? I went back a little bit. I'm sorry about that. And then we have the VAT control account. The VAT control account shows VAT input and VAT output, right? So VAT input is always on the debit side and VAT output is always on the credit side, right? So here what happens is at the end of the month or the period that was supposed to pay SARS or claim from SARS, this is what we're going to do. We're going to put VAT input on the debit side and VAT output on the credit side, and then we balance. If the balance is on the credit side, then we owe SARS money. That money is payable to SARS. But then if the balance is on the debit side, it means SARS owes us money and they have to pay us. So it is basically that. So we're going to do an example together. We're going to do an example. Right. Going to stop sharing this because I have to share something else instead. Right. Because I want to do equation. I will share shortly. I just want to do equation. I'm still opening Word so that we can attempt this question. We have the question open. I will share my screen shortly, and I'll take you through the calculation that you understand what we mean. Okay, so we're going to do this, right? Like the example, right? So 20 suppliers uses a fixed markup of 40% on cost, right? The business is registered as a VAT vendor. The current VAT rate is 14%. So here they were still using 14% on this question that I'm using. So what we're going to do is that they told us that what, right? So we know always 100 is equals to the cost, right? And then 40% is equals to the markup, equals to the markup. And then 140 is equals to the selling price. Right. So we start from there. And then this is in relation to the markup, right? But then on the other hand, right? On the other hand, 100 is equals to cost or selling price, right? It depends on what you are looking for. Okay, let's remove this. I don't want to confuse you. So this is what's happening. So when it comes to VAT, right, we're going to have 100 is equals to cost or selling price. Is equals to, okay, 100 is equals to what? VAT exclusive. If it's VAT exclusive, it doesn't have VAT. 15, let's use 15 because I don't want to confuse you. Forget about the 14 that they wrote on the question. Let's use 15. It is equals to the VAT rate. It's the VAT rate, right? So 115 is equals to what? VAT inclusive, right? So before we even start with anything, right? We are going to do this, right? Okay. And then they are saying calculate the following, right? Number one, VAT charged by suppliers on one dress. Selling price of one dress exclusive of VAT, VAT charged to the customer on one dress, VAT charged by 20 suppliers on one pair of jeans, selling price of one pair of text exclusive of VAT, right? And then we have the information, right? The following items were purchased during the month from 20 suppliers. 100 dresses at 285 each, VAT inclusive. So that amount includes VAT. And then 80 pairs of jeans at 180 each, VAT exclusive. That amount excludes VAT. And then they say 6 pairs of tickets at 110 per pair, VAT exclusive. All right. So what we're going to do is number one. So we're using the information that now on number one, they're saying we should calculate VAT charged by trendy suppliers on one dress. All right. VAT charged by trendy suppliers on one dress. All right. So now this information relates to trendy suppliers, right? And then dresses were told that it's 285 each, VAT inclusive. So right now we are being asked to calculate the VAT that is charged on one dress, right? So I want you to note that the VAT that trendy suppliers charged is the VAT that trendy suppliers charges to the customer. And on the information, they're talking about purchases. So this right was purchased, but what was purchased during the month from trendy suppliers, right? So now we want to calculate how much VAT was charged to the customer. And then they asked us on one dress, right? So what we're going to do, we know the cost price of one dress, VAT inclusive, right? It's 285. And then we multiply it by, what are we looking for? We're looking for the VAT. Multiplied by 15, what do we have? We have VAT inclusive, which is 115. So when I calculate 285 times 15 over 115, we're not going to use 114 because it's going to confuse you. I don't want to get, it's no longer that amount, right, comma 70. It's 37 rand, comma 70, right? So this is the VAT on one dress. And then we go to 2. The second question is selling price of one dress exclusive of VAT. Right. So right now we're going to calculate the selling price of one dress exclusive of VAT. So what do we have? We have a VAT inclusive. We have 285 multiplied by. What are we looking for? The amount, the selling price exclusive of VAT. So we know that this 285 is a selling price because they say it's purchases during the month from 20 suppliers, and the business we're dealing with is 20 suppliers. So which means this is the selling price, right? So it's 285 VAT inclusive. What do we have, right? 285. What are we looking for? We're looking for VAT exclusive, and VAT exclusive is 100 over what do we have? We have VAT inclusive, which is equal to 115. So the answer will be 247.83. So this will be the what? The cost, the selling price exclusive of VAT. Then we move on to number 3, right? We move on to number 3. Number 3, they're asking us VAT charged to the customer on one dress. VAT charged to the customer on one dress. Right. So this question was a little bit tricky. I hope that you do not get a tricky question, right? Because this is really tricky. So because here they're saying that this information relates to trendy suppliers, right? We are in the books of trendy suppliers. And then they tell us the fixed markup of 40% on cost, and they tell us that the business is registered as a VAT vendor, right? The current VAT rate is 15%, ignore 14%, right? Then the information, the following items were purchased during the month from trendy suppliers, right? Then the first question, they asked, VAT charged by trendy suppliers on one dress, right? Number 2, selling price of one dress exclusive of VAT. Number 3, VAT charged to the customer on one dress. I feel like they were not clear, right, about what they're saying about this question. And they were not clear enough about what they want and who's buying from who, because they're saying what purchases, right from 20 suppliers, and it was not supposed to be purchases, it was supposed to be sales, because it's us, we cannot buy from ourselves, right? So this doesn't make sense, but the way that I interpreted it is the way it is here, right? So when they ask the question number 3, this is what makes me realize that they have made a mistake. It was supposed to be another supplier here, where they buy from and how they sell, right? So this is how you calculate. We'll stop here. I'll look for another question. This is how you calculate, but I just hope that you got an idea of how to navigate around this, how to calculate the VAT, how to do this and how to do that, right? Because at this point, there is no way that we'll be using this, right? Because the question was not clear enough. But don't worry, I'm going to look for a question right now. Give me a minute. Give me a minute. I'm looking for a question. Okay. I'm looking for the answer. Let me check on this question paper if there's VAT. Yes, there is. Good. Question 2. It's VAT. Okay, fine. Let's do this one. Let's do this one. That was just an example. Let me share again. So which one is this one? And this one. Share. So this paper is for 2018, right? It's a 2018 paper. So we have this question 2.1, right? Let's go through it. Samsung traders are registered for VAT. The VAT rate is 15%. I love this because it's relevant, right? Required, calculate the figures indicated A to D in the table below, right? You are the internal auditor, the sole owner. Samsung used a business check to buy a new car for 460,000, including VAT. This car is kept at home for his wife's use. Samson says the vehicle must be recorded as a business asset and 60,000 must be recorded as a VAT input in the business's books. Explain what you would say to Samson. 2 points, right? And then let's do the calculation. We'll go to what to say to Samson, right? Calculate the figures indicated by A to D. Right. So A, right? So we have information, we have sales returns, purchase of stock, discount received, and then they put an asterisk here. Let me try to zoom in on this question. They put an asterisk here. This includes zero-rated goods that should have been sold for 5,500. The bookkeeper has incorrectly included VAT of 825 on this goods. This must be corrected, right? So sales returns, right, excluding VAT, were given the amount including VAT, and now we have to calculate the VAT amount. So what I taught you doesn't change, right? What I taught you doesn't change. 100 is exclusive, right? 15 is the VAT rate. 115 is equals to inclusive. Right. So now we can start answering our question. Right. So A, to calculate A, we're looking for the VAT amount. Right. When we're looking for the VAT amount, we're giving the excluding amount and the including amount. So using the excluding amount, 960 times, you ask yourself, what am I looking for? The VAT rate multiplied by 50. And then you ask yourself, what do I have? The excluding amount, which is 100. And then you will get 100. You get 144. So A is equal to 144. The VAT amount is 144. All right. And now we go to B. B, we are given, it's the purchase of stock. So we purchase stock with the amount excluding is 52,600. And then the amount excluding is 62,600. The VAT amount is not given. And then the including amount is also not given. Right. So from B, we're given the excluding amount, which is 52,600. Right. What are we looking for? We're looking for the VAT amount. So multiply by 50. What are we using? The excluding amount, which is 100. So times 15 over 100. It's 7890. That is the VAT amount. All right. And then we move on to and then on C, here there's discount received, right? So it means a discount was received, and we have the VAT amount. Now we have to calculate the excluding amount. So it's going to be 720. You ask yourself, what am I looking for, right? And then we're looking for excluding, and excluding is 100. Then what do we have? We have the VAT amount, which is 15. So 720 times 100 divided by 15, which is equals to 4,800, right? And then the D. Okay, it's popping out C here. Going to paste. And then we're going to D. So on D, it's cash sales, right? So we are looking for the VAT amount. But then we are told, and we're given the including VAT. But then we are told that this includes the zero-rated goods that should have been sold for 5,500. The bookkeeper has incorrectly included VAT of 825 on these goods. This must be corrected. Right. Okay. So in this including VAT amount, right, what we're going to do is that we're going to look for the amount that's in relation to this, right? So they're saying that it should have been sold for 5,500, and the bookkeeper has incorrectly included VAT of 825 on this goods. So what we're going to do is that we're going to find the amount that was supposed to include VAT, right? So we're going to take 112,470, right? We subtract 5,500 because it is there, right? This was the amount that was supposed to be. It was supposed to have been sold for, but VAT was incorrectly included of 825. So it means that they charged VAT. This whole amount is in this amount because they're saying it's including. It was supposed to be sold for 5,500, and because it's zero rated, that would have been the amount excluding VAT, right? Because it's zero rated, and zero rated suppliers are charged at 0%, right? And now we're told that there was VAT that was incorrectly included of 825. So we're going to subtract that, and we're going to have equals to 112,470 minus 5,500 minus 825. Now we have 106,145. Right. So this is amount including VAT of actually things that are standard rated, right? Because we excluded the zero rated thing and the VAT that was incorrectly included, right? So now we have this amount which is inclusive, and we're calculating what? The VAT amount. We're going to multiply it by what? 15, because we're looking for what? VAT. And then we have what? Including VAT, which is equals to 115. And then the VAT amount is 13,845. So we're basically done with this question, right? We're done with 2.1.1. Okay, we're done with 2.1.1. So now we're going to the discussion question. Discussion question is 2.1.2, right? So they're saying that you are the internal auditor. The sole owner, Samson, used the business check to buy a new car for 460,000, including VAT. This car is kept at home for his wife's use. Samson says the vehicle must be recorded as a business asset and 60,000 must be recorded as a VAT input in the business books. Explain what you should say to Samson. Provide 2 points, right? So, number one thing that I would say to Samson is that VAT input is only claimable on goods and services that relates to the running of the business, right? Right. That's the point number one. We are explaining to Samson, right? What VAT input is only claimable on goods and services that relates to running of the business, right? And the car is at home and the wife is using it. It has nothing to do with the business. Therefore, we cannot claim VAT, right? So now we told him what it is, right? The car is being used by the wife and not for business purposes. Therefore, VAT input cannot be claimed from SARS. So this is it. They just needed 2 points, and then you get how many marks? What are the marks? You get your 14 free marks, right? And then you're done. You're done here. You get your 14 free marks, and then you are done, right? So these are the answers. I will send this through to you. I hope this was helpful. I hope this was able to assist you and open your eyes in order for you to understand. Thank you.